Hello traders and welcome to the London Forex Broadsheet's daily wrap of the markets for Monday, August 11th. The euro rose as high as 1.5082 in overnight trading as oil rose 1%, then continued its decline from last week as oil fell 1.8% during New York trading. In Germany, the Federal Statistics Office said wholesale prices in July rose 1.4% and increased 9.9% in the year, bringing the year-over-year rate to the highest since November 1981. On the daily chart, it looks as though the euro will form a bearish pin bar on the close. The euro is at a level that it really needs to hold. A break and hold below 1.4900 could see the pair fall to the 1.4850 level and beyond. There are no daily simple moving averages to act as support now. The cable rose with the other majors against the dollar, then resumed its decline as oil fell and U.S. stocks picked up. The BRC Retail Sales Monitor and Rick's House Price Balance will be released today at 19:01 Eastern Date Time. The ONS will report on July's CPI on August 12th. As is the case with the euro, the cable has no daily simple moving averages below to act as support, and after breaking below the support line on Friday was unable to test that area today. This is a huge week of economic releases for the UK and could create wild movements with the pair. The Aussie was sold to the lowest level since January 30th as commodities weakened and the dollar reasserted itself during the New York session. The RBA released its quarterly policy statement early Monday and indicated it may cut borrowing costs soon. The bank also expects significant reduction in inflation over time. The Aussie has declined 10% against the dollar since hitting a 25-year high at 98.49 cents on July 16th. The RBA believes demand pressures in the economy now appear to be easing and said it expects a significant period of slower economic growth. The pair continues to move in a downward spiral as outlined on the 4-hour chart. Strengthening in the pair overnight gave way to continued dollar strength through the U.S. session, which has pushed the pair briefly below the 8,800 level. Loonie continued to rise Monday from its break of trendline resistance on July 25th. Reaching its highest level since August 17, 2007 after oil and other commodity prices continued to decline. There was another weak economic report from Canada today that figures to add pressure to the Bank of Canada to lower rates at its September 3rd meeting. The Canadian Mortgage and Housing Corporation reported that the yearly rate of urban single and multiple housing starts decreased 14.8% in July. Also, Statistics Canada said today that Canadian new home prices increased 3.5% from June 2007. This is the smallest gain since March of 2002. The pair continues to trade higher, gaining another 20 pips today, and is also trading well above the daily simple moving averages at its highest point in more than 12 months. The Swissy rose as U.S. equity markets advanced and treasuries declined, reaching its highest level since February 26. The 4-hour chart shows the Swissy continuing to trade higher. The pair is a good gauge of overall dollar strength and weakness and direction. The pair is trading at its highest level since February of this year. Japanese yen traded within a fairly narrow 75 pip range as U.S. equity markets traded higher. The trend of yen weakness looks to be continued after the Japanese government acknowledged on last Wednesday that the economy is deteriorating and that there is a high possibility the economy has entered a recession. Traders will be looking closely at the preliminary Q2 GDP announcement on August 12th. The daily chart on the yen shows the pair trying to hold above the 110 level, matching Friday's efforts. All of the daily simple moving averages are below the current price and should provide good support if we experience a pullback. On the upcoming economic calendar, we have several top-tier releases scheduled for tomorrow. We have the CPI out of Great Britain, trade balances released out of Canada and the US, and preliminary GDP out of Japan. In Asian equities, the Nikkei rose 225 points or 1.72% to close at 13,394. The Australian S&P ASX rose 23 points or 0.47% to close at 5,009. In European stocks, the German DAX rose 47 points or 0.7% to close at 6609, while the UK's FTSE gained 52 points or 0.96% to close at 5541. and the Dow Jones Stock 600 was up 3 points or 1.31% to 293. On Wall Street, at the close of floor trading on the New York Stock Exchange, the Dow was at 11,782 after gaining 48 points or 0.41%. The S&P closed at 1305, up 9 points or 0.69%, while the Nasdaq finished trading at 2439 with an increase of 25 points or 1.07%. Crude oil for September delivery fell 75 cents or 0.7% to settle at $114.45 a barrel after falling as low as $112.72. The latest news in the Russian-Georgian conflict is that Russian troops have entered Georgia. Georgian officials accused Russia of seeking to overthrow their government. Gold futures for December delivery dropped $36 or 4.2% to close at $828 an ounce. Treasuries were lower as traders moved into equities. The 2-year note yield rose 5.7 basis points to close at 2.55%. The benchmark 10-year note gained 7.2 basis points to yield 4.007%. Overall, markets were unsure about what effect the Russian-Georgian conflict would have on oil prices, which right now are playing a crucial role with regards to the dollar and equity markets. News of a possible supply disruption on geopolitical tensions has been a good enough reason to see oil appreciate fairly strongly in the past. Indeed, a flat tire in Nigeria was previously reason enough, but the present bearish sentiment on the commodity seems to be outweighing this. After turning almost 1% higher in the overnight session, oil went negative at about 11 a.m. Eastern Date Time, as equity indexes turned positive, and that allowed the dollar to resume its rise against the major currencies. This concludes our daily market video wrap. We thank you for making us part of your trading day.
All contents of the LFB are for informational purposes only and should not be used as a replacement for research by an individual investor, trader, or licensed investment professional. Neither the LFB nor any of its affiliates shall be liable for any errors, omissions, or for any actions taken in response to the information contained herein. We hereby make no representations or warranties regarding the accuracy of any information contained in this broadcast or on our site. Forex market trading involves special risks and may not be suitable for everyone. Each investor or trader should assess their financial situation and risk tolerance before proceeding. Copyright 2007, LFB Services, LLC. All rights reserved.